For our next keynote, you'll be hearing from Natalie Knight, Chief Financial Officer at Ahold Delhaize, and Vince Jones, E-commerce Chief at PepsiCo. They will be interviewed by Insider Intelligence Principal Analyst Andrew Lipsman for a discussion on unlocking e-commerce profitability.
All right. Welcome, Natalie. Welcome, Vince. Great to have you both here today.
Thank you.
Thank you. Exciting to be here. I'm a first-timer, by the way.
So, yeah.
Yes.
First-timer. So we're talking about e-commerce profitability. That's not an oxymoron. So according to a Winshop study, e-commerce profitability is the #1 problem facing grocery retailers today, with 86% saying they're dissatisfied with their current levels of e-commerce profitability. Now, we know the backdrop of the economy right now. Inflation's up. Everybody's feeling the squeeze. Consumers are pulling back on their spending. Supply chain costs are up. Digital ad costs are up. And yet, some retailers and brands have managed to perform quite well during this period of time. In fact, both Ahold and PepsiCo both turned in great earnings during their most recent quarter. Natalie, I'll kick it off with you. So how do you navigate the challenge of e-commerce profitability amid the backdrop of this current economic uncertainty?
Well, thanks for the question, because we think that the future is omni-channel, and a core piece of that is how do we win also in the e-com channel. I think that's really critical. And when we look at our business, we've seen that in the last couple of years since COVID started, e-com has grown over 250%. We've got penetration of close to double-digit at several of our brands. And we see big opportunity going forward. When I look at other industries, I've seen 4 retail groups that doubled in less than 5 years and doubled the size of penetration again in 5 years. So that says to me, we're on the cusp of something very exciting, even if the economic backdrop is pretty tough. And what we're focused on at Ahold Delhaize is really 4 things that we think are critical to being successful in this area. The first one is, how do we drive more sales leverage? That's really key. Second, we want to optimize our operations. Retail is detail, and this is a place where there's lots of opportunity. Third, it's about how do we create, enhance, and make an even better CVP so that we can win in this unique environment. And fourth is about complementary revenue streams, where we think there's a real potential to be able to turbocharge what we're doing in e-com profitability as we go forward.
So complementary revenue streams like retail media?
That's a big part of it, yes. But also data insights and things that you would see traditionally in-store and out-of-store as well.
We'll come back to retail media. So you mentioned 4 sort of pockets of opportunity. Can you walk us through some of the key ones and really how you're thinking about those?
Let me concentrate on 2, because there's a lot of stuff to unpack in there. But I think the first one is that we look at just what's happening on sales leverage. If you looked at last year, if I'd been on the stage, what you would have heard was, we just keep selling more, and we get scale, and there's a lot of opportunity. And I think what all of us in retail have learned this year is it isn't quite that simple. As we've built up capacities, it's really more an issue of how do we match supply, demand, the competitive set. And at our company, we've created a proprietary networking tool where we look at really how do we optimize those things to grow the opportunity for sales as we go forward. And that's something I'm very excited about, and it's continued to help us grow at a real overproportionate level going forward. And the other one that I'll talk about is on CVP, because I think people tend to think of CVP as either something you do at brick and mortar or something that has to do with fees and delivery times and that kind of thing. And there's so much more that you can do with it. As an example, in our business in Europe, one of the things we've started to do is offering delivery slots that are based on what's the CO2 output you want to bring. So we have something where our customers can choose, I'll take all my orders at once. That gives us higher margins, it gives them more convenience, and it does something for the sustainability as well. So there's lots of opportunities, I think, in e-com where on the one hand we can enhance profitability, but on the other hand we can also drive a continued growth of the business and also a better customer experience.
And Vince, e-commerce profitability, it's a little bit of a different challenge for brands. So what levers are you focusing on to try and capture those margins?
Yeah, absolutely. So I think first, before I get into that, I want to say, the way that our team at PepsiCo is approaching this is every day we're very focused on creating a delightful consumer experience across all digital channels for consumers who are searching for our products. Now, we do that. We also focus on being great partners to our retailers, and we feel like the combination of those will really position us well in the marketplace. Coming back specifically to the profit question. So I think first thing is you're really looking at channel and product mix and how we can optimize that. So for example, in a channel like Pure Play, where some of the expenses are a little bit higher in the supply chain, we might commercialize specific SKUs that get to a higher average price point in that channel. So we get a little bit more profit in each of those orders, gets up to a higher average order. Or we might do something like focusing less on maybe liquids, more on tablets and powders and things like that. So really thinking about those things we can do with our assortment in each of the channels. Also, just looking at the channel mix and really leaning into the places that might have more sort of single-serve items or other items that have higher margin. Those are things that we like to lean into those channels as well. And then coming back to sort of in the sort of click and collect space where you see really the store being the fulfillment center, but the consumer making those orders online. Well, we know that things like variety pack, multi-pack over-index in those orders. And so finding ways that we can work with the stores to get more of those products into those stores, make sure that we're capturing those sales. And those are sorts of things that we do sort of across the assortment in the portfolio. Then I think the next big bucket, obviously, and I think we're hearing a lot of discussion around this. What are the things that we can do, around our marketing levers? And so we're really focused on working with partners and working with tools where we have the ability to, at a very granular level, run tests, understand the performance of campaigns, of certain creative. And really, when we have that ability to measure those, it allows us to double down and invest in the highest performing areas. And so that's certainly something that's important. I would also say, we have a very strong portfolio of brands across the food and beverage category. We see, and over the years have learned that, our highest performing marketing is when we actually can put out advertising for food and beverage together, and those outperform like single brand marketing. So really leaning into our full portfolio there. Then capabilities that we've built internally, I think we have a platform that allows us to manage at scale how we do bidding and optimization. And so we can do tests at scale, we can optimize bids based on returns or things that we're seeing in the marketplace. And so the team has done a tremendous job with that tool. And then more recently we're starting to add some additional capabilities such as providing visibility back into the supply chain so that we could actually pause bidding on keywords if we see that an item is running low in stock, because we obviously don't want to be spending on something that we don't have in stock, or the ability to make bid adjustments, sort of in real time based on things that we see in the environment. And then more recently even, adding sort of day part bidding as a part of that capability where we see that, the return might be higher in different parts of the day. And so those are the types of things that we're really focused on in that marketing space. And then a couple of other areas that I won't go deep in just for the sake of time, but we're also making significant investments in supply chain automation. That's obviously important given the complexity of these categories and these channels. And also net revenue management is another big area of focus for us.
So lots of data-driven optimization in advertising supply chain. One of the other things that we hear about really getting in the way of profitability is silos, organizational silos, right? We often hear about brick and mortar and e-commerce teams not working in unison. I'm also wondering, is there an opportunity to break down silos between partner companies? In other words, the retailer and the supplier.
So I think absolutely there is. I think we're all living through this on both as CPGs and retailers. What we are seeing is this consumer behavior of adopting e-commerce for these channels that we've seen the rapid growth over the COVID period, those behaviors are sticky. In fact, we have a survey, we have a panel of about 1,200 consumers that have adopted e-commerce in COVID, and we've gone out to them about 12 or 13 times over the last few years. And those consumers, 90% of them are telling us they're going to continue, at least in a hybrid way, leveraging digital channels for some of their shopping. And that's good news, because we also know that the omni-channel shopper tends to be the most valuable consumer for our retail partners. And so I think that creates a great opportunity. You mentioned the concern over profitability for us to really, given the change that we're all facing, recognizing the impact that this is having on our shared ecosystem. And I think it is an opportunity for us to sort of get away from maybe the traditional model where you would have a merchant and a CPG salesperson, and they're really the primary point of contacts, and sort of all the other functional teams are held at an arm's length distance. I think this gives us an opportunity to think about together in an end-to-end approach what we can design in this ecosystem to benefit all of us while delivering that consumer experience. And so I think it's having technology and data teams working together, having supply chain teams and store operations team from retailers and CPGs working together, having the site merchant teams and our e-commerce marketing and sales folks. So I think there is a great opportunity. I realize you'll probably might require a little more openness and trust than has existed historically in some of the relationships, but I think it's necessary for all of us to get to the right solution.
And Natalie, your opinion on that? Retailers and brands collaborating?
Oh, love the idea, and it's definitely something we care about a lot at our company, and I really do believe this is the trend of the future. If we hadn't all been working well together historically when it came to data insights and supply chain and automation and how do we target the consumers more, everything online gives us an opportunity to, I'll say, do that times 10, because the data and the power of information that we have behind it is just so much more. And I think, you talked about, Vince, the power of the omni-channel customer. That is one where we know they buy 2 to 3 times more, the loyalty is higher, the shopping frequency is higher, the margins are better. So there really is a big desire for us, I think, from a retail point of view, but also with our CPG partners and vendors to say, how do we make this even stronger? Because if we can make our ecosystem work together, we really do create probably the most profitable way to go after e-commerce. And I think we also have to remember that e-commerce is part of the bigger omni-channel profitability. And as much as I am really preaching to the choir about the importance of e-com profitability, let's also remember it is part of that bigger omni-channel profitability, and we have to make it all work to be most successful.
So speaking of omni-channel, let's talk about e-commerce as it comes from the store. It's still where 90% of food and beverage comes from. So Natalie, how are you thinking about the channel mix, category mix, assortment to generate more profitable e-commerce transactions?
So there's a lot in there, but I think the ones, maybe if we start with what's happening on channel mix or assortment, for us it's very much about the basket and optimizing that basket and making sure that when people come in, they're being able to get things at a price and margin that's going to make it affordable for us to be able to deliver that product. And when we think about it, what comes to mind is a lot of times getting the right, I'll call it basket builders in there, whether they're private label or fresh, sorry Vince, but being able to create some new opportunities as well in terms of what we're able to do on those dynamics. And when it comes to channel, what we're doing is looking a lot at how do we combine the value of general merchandise with our food retail. In our portfolio, we've got 3 pure play brands, 2 that we've had for about 20 years, Peapod here in the US and Bowl.com in Europe, and we've just bought Fresh Direct in the last couple years. And that's a place where we're being able to bring all kinds of insights into our business so that we can be very thoughtful about how do we really take those opportunities to be even stronger in the space.
And really quickly, click and collect versus delivery orders. I assume a click and collect order is more profitable. But things seem to be moving in the direction of delivery. It accounts for about 2/3 of orders overall. So what are your thoughts about those two? And do try and actually steer the consumer towards click and collect?
So for us, the home delivery isn't quite that much yet. We still find that we're getting the majority of our business is coming through click and collect. But I think the trend is, you're right, that we're moving definitely towards something where we're going to have more delivery and faster delivery and people wanting more service quality behind that delivery. But today, we are trying to make sure we do both of those things, and click and collect is more profitable for the time being in the US. And so we do really simple things, a lot of them, like making sure that the delivery fees are cheaper if you do click and collect versus what you would do if you got a home delivery. We're doing things in our store where we now have the logarithms to see how are the products moving in stores where we have click and collect, so we can be smarter with our planograms to make sure that we really have the product selling through in a way that isn't distracting to people who are coming in the stores, but it's optimizing what we get out. So I think there's a lot of fun opportunities for us as we go forward there. But at the moment, I think it's really something where we want to be able to preserve that higher profitability of click and collect, and at the same time start to build even more the home delivery business.
Vince, I want to shift gears here really quickly to talk about maybe the purest form of e-commerce, direct to consumer. PepsiCo, back in the early days of the pandemic, did a fairly high-profile launch of snacks.com and pantryshop.com. I think the whole industry was watching and seeing what was going to happen. And my question is, can direct-to-consumer for the majority of CPG brands ever really be more than 1% or so of sales? And if not, how should we be thinking about the direct-to-consumer play?
You bet. So I think, and to be clear, these are still very small businesses relative to our overall portfolio. But I think as a consumer-centric company, we want our products to be available for consumers in any channel, whenever and wherever they want. And so I think that's an important part of it. That said, to your point about size and scale, I think a lot of the purpose of some of these sites can really not necessarily be about revenue, but be more about building that one-to-one and direct relationship with the consumer. And being able to leverage that for insights into different things about our business. So, for example, we can do test and learns about new product innovations. We can do things like sampling. Also, we can even learn about how consumers act with different combinations of our products in a digital format. And so, having that relationship, that ability to do the test and learns, really we can take back and actually help across our portfolio and help drive our broad retail business. So I think it's not necessarily just about the revenue in that case. It's really more about that relationship, that data, and how we can leverage that more broadly across our business. I will say there probably are a few places I would highlight that that we do think there's some significant opportunity. So a Gatorade digital ecosystem. We have on the Gatorade.com site, you can actually order customized Gatorade bottles and get GX pods as well, so you can have your name, your favorite team on there. There's also actually an app, the GX app, and you can have a sweat patch that you can wear while you're working out, and it actually will measure your sweat and actually give you a personalized recommendation for how you need to rehydrate based on your workout. And so I think those are cases where we think we have something that's a little more unique that we can bring, and so I think you'll see more there. I think SodaStream is another good example with the bottle exchange, and we think there's some interesting things around the ecosystem. And Snacks.com, of course, is the place where you can get your custom Frito-Lay multi-pack variety pack. So if Flamin' Hot Funyuns isn't for you, you can build your pack without those.
In the couple minutes we have left, I want to finish off with retail media, which is really the big kahuna here when it comes to profitability. It's a $40 billion market today here in the US, on its way to $60 billion by 2024. Natalie, tell me your thoughts on retail media. You actually have a commitment to turn that into a €1 billion business by 2025. How are you going to get there?
Yeah, well, we do want to triple our numbers, and I think it is about creating that ecosystem where you unite retailers, with our CPG partners and others to really create something that isn't there today. And in our business, we're very excited because in 2023, we're going to have a first, which is the first unified online, offline retail media platform. So you're going to have one-stop shopping where, for our company, where we've got 19 hyper-local brands, you're going to be able to go and do 50% or more of your shopper marketing with us, have all the insights, be super targeted, and be in a way where we can build also things that are bespoke opportunities. So when we work with people like you, Pepsi, where we've got, you're pretty far on the journey yourself, how do we create opportunities that are maybe in the out-of-home or in other areas where you've done less so far, and really build on those skill sets that you've done a lot in the sponsored marketing? But I think this is a spot where there are really endless opportunities. It's about how do we go out and create this new environment together. It's great margins. It's something that I think also offers something truly special to our customers that they haven't found. And when we unite those two things, it's great that it also brings something that could be a big, big driver for e-com profitability as we go forward.
It looks like we have successfully run out the clock. So I think we're going to have to leave it there. Natalie, Vince, thank you for joining us on stage.
Thanks.
Thank you.